Hi and welcome to our analysis of Anant Raj Ltd, a leading player in the construction, real estate industry. Anant Raj Ltd was incorporated in 1985 as Anant Raj Clay Products by Ashok Sarin. It is amongst the leading and most prominent real estate developers in the National Capital Region. Since then, the company has seen explosive growth. Its stock has delivered over 82% returns annually, and its revenue has grown by more than 5 times, all within just 5 years. In this video, we will delve into Anant Raj's business segments, revenue segments, shareholding, management, cost structure, financials, management outlook for the future, and strengths and weaknesses. Let's get started on the stock analysis of Anant Raj Ltd. But before that, let me introduce ourselves. We are PA Wealth, an investment services group. We offer stocks, PMS, mutual funds, alternative investment funds, insurance, and startup investments. Every week, we upload research videos on different companies, mutual funds, and financial topics. Stay ahead of the curve with the latest trends and insights by subscribing to our channel and clicking the bell icon to get notified about potential multi-bagger stocks. Let us provide a brief introduction to Anant Raj. Anant Raj Ltd is primarily engaged in the development and construction of IT parks, hospitality projects, special economic zones, office complexes, shopping malls and residential projects in the state of Delhi, Haryana, Andhra Pradesh, Rajasthan and NCR. The company has successfully developed more than 20 million square feet of real estate projects in the housing, commercial, IT parks, shopping malls, hospitality, residential and affordable housing subsegments. Now, let's look at the business segments of Anant Raj. First, residential. Under this segment, the company's primary focus is on the development of Anant Raj Estate at Sector 63A, in South Gurugram. For this purpose, it has formed a joint venture limited liability partnership called Avana Projects LLP with Birla Estates Private Limited. Second, commercial. In this segment, Anant Raj focuses on the development, operation, and leasing of large-scale IT parks and office spaces, including properties such as IT Park Manesar, IT Park Panchkula, IT Special Economic Zone Rai, and the office building at Sector 44, Gurugram, generating significant revenue from these commercial properties. Third, warehousing project. Under this segment, the company plans to develop fully paid freehold land parcels in Delhi and Haryana into warehousing projects within a span of 5 years. Fourth, hospitality. In the hospitality segment, the company develops premium hotels in prime New Delhi locations, with projects like Hotel Stellar and Hotel Belle Le Monde operated by third-party operators on long-term leases. Fourth, data center. The company is venturing into the data center industry, leveraging its commercial property boasting a potential leasable area of 5.66 million square feet, earmarked for conversion into a 300 megawatt data center. Strategic partnerships have been formed with essential government agencies. By financial year 2023, 3 megawatts were already operational in Manesar, with plans for an additional 50 megawatts to be operational in the near future. Now, let's discuss the revenue segments of Anant Raj. Real estate sales is the largest segment of the company's revenue, accounting for 97% for the financial year 2023. This is followed by the rental services segment, which accounts for 3% of the total revenue. Now, let's look at the management of Anant Raj. Anant Sarin is the managing director of Anant Raj. He is a commerce graduate from University of Delhi and started his career with the company in the year 1995 as executive director of commercial segment. He is having experience of around 25 years in finance, administration, construction, infrastructure development and real estate business. He has been instrumental in company's development and diversification to its parks or special economic zones, commercial, residential and hospitality business. He is also looking after finance functions of the company. Anant Sarin is the director and chief executive officer of Anant Raj. He started his career with the company in 1995 as executive director of operations. Having bachelor's degree in commerce, Anant Sarin has been credited for setting up internal system of the company in sales and marketing, land acquisition and operations management. He has cultivated a strong, efficient and ethical work culture in the organization. Anant Sarin is the director and chief operating officer of Anant Raj. He started his career with the company in 1998 as executive director of construction. He holds a master's degree in business administration from Switzerland. He manages the construction and development of business, including operations of IT parks, office buildings, hospitality and other development projects. He has over 2 decades of experience in the construction and development business. Let's take a look at the shareholding of Anant Raj. The promoters are the largest shareholders of Anant Raj with a holding of 60.00%. Mutual funds hold 1.21% of the shares. Foreign institutional investors hold 11.52% of the shares. The public holds 26.03% of the shares. Other institutions include several investors, such as banks and insurance companies. They hold 1.24% of the shares. Let's look at the cost structure of Anant Raj. Raw material expenses are the largest component of Anant Raj's cost structure, accounting for 73% of the total costs. The employee cost accounts for 1%. Other expenses account for 3% of the total costs. Now, let's focus on the financials of Anant Raj. The table shows that the company's net sales have grown steadily from 484 crores in the financial year 2015 to 1,483 crores in the financial year 2024 at a CAGR of 11.85%. The company's profit after tax has also grown steadily from 142.07 crores in the financial year 2015 to 264.54 crores in the financial year 2024 at a CAGR of 6.41%. At last, the company's return on equity has increased from 3.40% in the financial year 2015 to 7.20% in the financial year 2024. Let's now turn to the management commentaries to get a better understanding of the company's performance. According to a report, India's real estate market is expected to exhibit a growth rate of 9.2% during 2023 to 2028. A revenue potential of 15,000 crore rupees from residential sales in Sector 63A, Gurugram, is anticipated over the next 4 to 5 years. Anant Raj has entered into strategic partnerships with RailTel and Telecommunications Consultants India Limited, both public sector undertakings under Government of India in financial year 2023. Over the next 4 to 5 years, the company aims to expand its data center capacity to support a 307 megawatt IT load. The enhancement efforts have begun in Panchayakula, starting with an initial 7 megawatt IT load. Once the full 307 megawatt capacity is operational, anticipated rental income is expected to reach 3,300 crore rupees. In January 2024, Anant Raj successfully completed its QIP, raising approximately 500 crore rupees. These funds are designated for debt reduction and various operational requirements of the company. Anant Raj anticipates achieving a debt-free status by December 2024. The anticipated total capital expenditure for constructing data centers with a capacity of 300 megawatts over the next 4 years ranges between 8,000 crore rupees to 10,000 crore rupees. The primary funding source is expected to come from the monetization of Sector 63A. Should there be a deficit, they plan to utilize lease rental discounting as an alternative means of financing. Now, let's focus on the strengths and weaknesses of Anant Raj. First, strengths. Seasoned leadership. Anant Raj, led by the experienced Sarin family, particularly Mr. Ashok Sarin, boasts over 25 years in real estate. Their successful track record spans 4 decades, showcasing their expertise and reliability. Dynamic project portfolio. Anant Raj's active involvement in 8 ongoing projects, spanning residential and commercial sectors in Gurugram and Tirupati, highlights its commitment to project execution and market presence. Strategic location advantage. With projects strategically positioned in Gurugram and Tirupati, Anant Raj leverages proximity to essential facilities and commercial hubs, enhancing the appeal and marketability of its ventures. Second, weaknesses. Group-related financial exposure. Anant Raj's investments in subsidiaries and loans to related entities pose inherent financial risks, potentially impacting its overall stability and performance. Regional market dependency. Concentration on the Haryana real estate market exposes Anant Raj to the volatility and uncertainties of regional economic conditions, posing challenges to sales and revenue. Industry vulnerabilities. Despite its strengths, Anant Raj operates in a real estate sector prone to cyclical fluctuations and intense competition. External factors such as regulatory changes and market dynamics pose ongoing challenges to sustained growth and profitability. That's all for today. I hope you found this video helpful. If so, please give it a like and subscribe to our channel for more research-based financial content and click the bell icon for potential multi-bagger stocks. In the comments below, let us know what topics you'd like us to cover in future videos. Thanks for watching.